Good morning from Los Angeles. It's Alyssa Corum and Ed Carson here. We have your market update. It is Monday, October 1st, the start of a new quarter. And on today's show, we are taking a look at Tesla, GE, as well as SFIX. So looking at the major indexes, we have the Dow leading the gains up 1%, while the S&P 500 is up 0.8%, and the NASDAQ is up 0.7%. So we now have the NASDAQ back near all-time highs after finding support at the 50-day.
Yeah, it's pretty nice. All the averages are close to all-time highs. I mean, the markets are rallying because there's a U.S.-Canada trade deal. That really takes takes a real cloud over the market, because the supply chains between the U.S. and Canada, U.S. and Mexico are very, very close. So it's really important to have that kind of connection continuing. In fact, it's much more important in many ways than some of the other trade disputes we're having right now. So that's really important. That's lifting a lot of things out there in the market.
That's right. We have Tesla, a notable mover today after the stock the company over the weekend settled with the SEC. We have CEO Elon Musk paying a $20 million fine, the company paying a $20 million fine. For at least 3 years, he cannot be chairman. He will stay on as CEO, but I think that given the circumstances, it's better than some had feared. Yeah,
in fact, you could almost argue it's a best case scenario because, I mean, GE and Musk is still there, and everybody generally agrees he's really important to, even despite his ups and downs, but they do get a different chairman. They're sort of a minder there a little bit, two new board members. Somebody I think actually has to review his tweets a little bit. So a lot of things that might be helpful. I mean, there's still shareholder lawsuits and other things out there. But I mean, the stock is rebounding. It's basically erased the loss from Friday, I mean, in the wake of the SEC suit. And then later this week, perhaps today, certainly by Wednesday, we'll be getting Model 3 production figures. People are expecting them to meet the estimate they've had, but that'll be a big guide to whether or not they can be profitable in Q3 or in the near term.
And would we expect that to be a catalyst for the stock?
Well, yeah, it's going to be a catalyst one way or the other, how that goes. I mean, there has been some information that they were going to meet, or if it comes in line, so maybe it won't move as much as you'd expect because there'd already been reports, yeah, they're going to do it. So, that's the situation. Obviously, their cash levels are low, so if they can start becoming profitable, and it has to be real soon, then maybe this can, that could really be a catalyst for the stock. But that's always been an issue for Tesla, becoming profitable.
Exactly. Well, we do have shares gapping up some 17% in heavy volume today, hitting resistance at those moving averages. It's still about 17% off recent highs, so quite a messy chart here.
Yes, it is. Absolutely.
All right. Well, pivoting our attention to GE, those shares are up about 12% in massive turnover today. The stock is still in quite the downtrend, but we have GE ousting its new CEO after just a year, and clearly investors are liking the sound of this.
Yeah, after 13 months, Flannery was trying to do stuff. He was going to sell off, units. He has already done some of that. But GE Power, it's a key unit, and the one that they were going to keep is really still struggling. So they hired somebody, Larry Culp, who actually ran down here for a long time. He was already on GE's board. He's really well respected at turning around that industrial firm. So, there's hope that maybe this can turn around. But obviously, if you look at this is a stock, it's really, really struggled over the years, and it's a long downtrend. I believe its relative strength line, which compares it versus the S&P 500, right. I think it hit like a 27-year low, or it's like it was something like, it was 27-year low, early, last week. So it's really, really been in trouble. So it's got a lot of work to do.
That's right, and even with the gap up today, that stock is still hitting resistance at that downward sloping 50-day line. So clearly, that's a key testing ground for the stock. I mean, if it's going to start heading in the right direction, you definitely want to see it close above the 50-day to start.
Yeah, there's a lot of work to do before you probably want to get interested in this as a stock.
Exactly. And we want to take a look at SFIX ahead of its quarterly earnings report after the close. We have analysts expecting Q4 earnings per share of 4 cents and revenue of $319 million. This is a fairly new company here, went public in November of 2017, and it's been on quite a big run.
Yeah, I mean, it took a little while, and this is something why you like to see a stock shake out, because sometimes IPOs will do okay, and then they fall apart. Well, this one broke out early this year. It's really been strong. I mean, they do a subscription service. It's an online retailer. People, they'll gather up clothing and send it to you based on your measurements and maybe your styles. And it's been pretty successful, but there's Amazon. It's a business that others can get into. It's not like so exclusive, obviously. They've got to have some formula. So that's something interesting, how many people are signing up. I mean, in addition to the revenue and earnings figures, I would think.
Exactly. And as far as buying the stock here, we do have a recent rebound off of the 50-day line, but as far as buying or getting in, we don't have a base forming as of yet.
Yeah, I mean, it had a nice run, and it's come back off of that, but you really want to see it consolidate for a while, because it could easily, I mean, it's had, that's a sharp drop, sharp up, and it could easily just tumble around, or it could take quite a while. It's just best to prepare yourself for it to get right when it's breaking out of a proper base. That's when you can maximize your chances for success for a big gain quickly and minimize your losses.
That's right. Okay, everyone, be sure to head to investors.com for the latest market news and analysis, and check out our social media pages. You can stay up to date with all the latest IBD there as well. Thanks for joining us this morning, and see you back here Tuesday.